Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. Guys, we might get a rate cut sooner than you think. Why? We're going to talk about it. Let's dive in.
Trade Genius.
Okay, Bob, I saw some headlines here about jobs that don't exist. And it's interesting because we're also going to go look at the actual data, but it does definitely feel like the administration or whatever is trying to promote the fact that the job market's nice and healthy. So what say you?
Yeah, what's funny is JOLTS report came out today and they said, hey, a lot more job openings. And I've been digging around here a little bit even before that report. And I'm finding out that job openings is really a misdirection, if you will. And companies will put job openings out, notices out with no intention of hiring anybody. And so, I just sit down and you think about why are they doing this, and a couple answers come up. One is to kind of mislead the public markets and customers saying, hey, look, this company's always hiring, they must be doing well.
Mm-hmm.
The other thing that comes up is that they have to post jobs out there for regulatory reasons, but they have no intention of ever filling those positions, right? For the anti-discrimination laws and age bias laws. And then also, if they want to hire people that are foreign, for the green cards, Phil, they have to post the jobs up. We couldn't find anybody to fill it. So therefore, we had to go offshore and bring in labor from outside the United States. And the other thing, too, they also want to keep people a little bit on edge that are inside the companies, too, by saying, hey, well, they're posting for jobs here. I can be easily replaced. So I better not agitate for more money or better conditions or what have you. So I'm going to throw that back at you before we throw the next chart up there, and I'd like to get your thoughts on that.
Yeah, I mean, it seems like we're always spinning the data and they're always trying to find a new way to do that. So, I think if you put, for me, like the household surveys, Bob, is the key, right? You look at household surveys and what you see on that, and there's a problem in the job market, regardless of what the numbers say that come out that the algos react to. So I think that's really what's going on. And especially what's interesting too is the comments that we're getting now in our videos is that people, it just seems like we've gotten a shift lately where people are saying it's getting harder or the jobs aren't quite there. The good times seem to be waning at this point. And that's just based on what I'm seeing in the comment section.
Yeah, and the money's not there either. So the job, and it's also a shift in the jobs to the lower end of the salary area, especially where I live here. There's a lot of really high paying jobs that are disappearing forever and they're not being replaced. And so it's one thing if you're losing high end middle management or skilled position job openings versus I need to hire 6 more people at In-N-Out Burger, so it's a problem. And this next chart is the one kind of the lead in that you gave for the podcast is that everybody is Bob, a Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening. There's a really, 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 really good indicator that shows once the Fed fund rate is flat and it crosses over, and I can't see it so close from me looking at it here, crosses over, I think it's the 50 moving average.
What it is the we just slap an RSI on the bottom to kind of give us a reference point on the moves for the unemployment rate. So this chart here in blue above is the unemployment rate. We talked about the rounded bottoms on the unemployment rate. We've repeated that message a lot in the last few months. And so that's the first part where you start looking for that to kind of continue to form. So we've gotten that. The second part is when the RSI, which is just the regular standard, technical analysis indicator, if you plot the RSI on the unemployment rate, when the RSI crosses 50, which is the midpoint, as we are now, we're doing that right now, that basically triggers an acceleration in the unemployment rate. So this Friday, we get our monthly unemployment rate number. Okay. So what we're going to be keying in on is how quickly that thing's going to start to jump up over 4%. And the reason why that matters is because if you look now on the chart, there's an orange line that I've overlaid on the unemployment rate. That is your federal funds rate. So this is where if it starts to go back down, that means rate cuts. So whenever you cross the 50 line on the unemployment rate on the RSI, then you are basically looking at imminent rate cuts. And basically that translates into unemployment rates that are north of 4%. So if this thing jumps up, if we get a big jump in unemployment, true, bad job data is bullish for the market in the short term because they're looking for a dovish Fed. But, I was talking about a September rate cut here, Bob. Given the historical performance of 50 RSI crosses on the unemployment rate, not only are we looking at potentially a cut at the July meeting, I thought it would be September. Really, this chart is saying, hey, brace for a cut in July if that number comes in really hot to the upside on unemployment. Not only that, but your recession at that point is within the quarter based on what we've seen in the past. So we're there, we're triggering that. I think that number is hugely important. I don't think people understand the importance of that number coming on Friday.
I agree, Phil. And, be ironic, because we've been focusing on September and even this stock market, if you notice, there's been a shift in options activity too. People aren't as bullish going into this quarterly earnings report. So it's been a little sluggish here, although it's starting to break again to the upside as of this afternoon. That maybe people are starting to get a little nervous here and the Fed may have to provide some grease here for the market. And it would kind of make sense, cut in July. If you cut in September, you're too close to the election. So maybe that's a possibility too. But at this point, I wouldn't be surprised with a July cut. I think most of the market would be really surprised. And that might be they goose the market with that move. And notice, look at the gamma squeezes they've had. Apple gamma squeezed earlier. You got Amazon squeezed, Tesla squeezing now. So they're starting to provide some option, call squeezes going on in the market here at JP Morgan, ahead of earnings. So that'd be really interesting to me. Then if they drop those rates, you get the rest of the market pushing with it, and then you can get out of the way in September and October for the election. So see if you're right, but we're positioned for it. If they do it in July, that's great. If they do it in September, that's great too. And I think what we're looking at is we're still looking for higher for the summer and then chop in the fall and big trouble in 2025.
Yeah, I think if they do a cut in July, it would be surprising, but I think you might see a knee-jerk reaction higher because the market's looking for that dovishness into the Fed. But reality, I think that sets up the top for the market. So, I know you've been looking at August. In that scenario, you might just get that.
Yeah, I hope so. I'm positioned for it. So let's see if we can make some money out of this.
Yep.
Come on, Jerome, do it for us.
Do it. All right, guys, thanks for watching. Let us know your thoughts on the unemployment rate and if you think a rate cut comes sooner rather than later. We'd love to hear your comments below. Otherwise, thanks for watching. Please hit like and subscribe, and also check out our stuff over at tradegenius.co. We'll help you navigate this market. If we get a recession, it has a lot of opportunities even when the market declines. So check it out. Thanks again.
Trade Genius.